Bitcoin is going to implode. People could die because of this. Bitcoin is an investment for fools and is centralized like the German banking system. Wow, that's absolute dynamite that comes up here at ARTE during the Bitcoin debate with Roman, Evelyn Brock, and Pierre Georg. What's going on here is really sensational. But there's also a lot of misinformation being spread here. And we definitely need to follow up on this, because there's a really, really bad vibe about what's going on here. Last year, Maurice Hofgen was a guest here, has really been shouting this from the rooftops, that it would be really bad. With Bitcoin, you couldn't finance wars anymore. This thesis would be confirmed again this year. On top of that, this is really where the line gets crossed, where it would be claimed that, yes, Bitcoin can even lead to that basically people could die because of Bitcoin. And hacker groups are being funded in North Korea, and whatever. But hey, folks, let's start from the very beginning. The video is really taking off right now. It's going pretty viral. There are some really heated discussions about this. I checked out the best parts, and now we're going to put it all into context together.
Look here, you lead the blockchain tether at the Frankfurt School of Finance and Management. The blockchain is a crucial technical component of Bitcoin. But you don't own any Bitcoin or any other cryptocurrency yourself. What?
I've always believed, if you want to teach that, you have to be free from conflicts of interest, as far as that goes. And then I couldn't really provide any more insight and then discuss it neutrally with my students, if I personally benefit from it. If the price goes up now, and everyone sitting here watching should really think about that. Whoever says something here and personally benefits from it, that he holds a certain opinion. And I've always thought that. As a professor, you can't do that. I also don't want a doctor who is paid by the crypto industry. You just have to maintain a bit of neutrality.
Very interesting. And we're not even getting into the argumentation here yet. He says here that he is a completely neutral professor. Now let's take a look at who he's on the payroll for. And if we look here, then he was here. From 2021 to 2026, he's on the Ripple list, and from 2021 also until 2026 on the Algorand Foundation list. He received 400,000 US dollars each time, and here he got 1.1 million US dollars. He's basically pretending to be the totally neutral professor. Yeah, he's not invested in anything here and blah, blah, blah. And let's just take a look at who is funding him here. Then we see that he is being funded by people who are on this anti-Bitcoin witch hunt. Of course, he's also on the government's list. So he's also funded by the government. And the government is, of course, tied to the euro again, because it's a government system. At least, I'm assuming that if there's a teacher at some university, he will probably also be funded by the government. And we just need to know this here, that here is basically. Now we're getting into a discussion where on one side we have some kind of blockchain, a novel, Evelyn Brock, who is, of course, advocating for Bitcoin. On the other side, we have this professor who is, of course, back on the payroll list. From some people who might also have an interest in bashing Bitcoin. We also see from Ripple that they're really going after Bitcoin with a lot of hate. But let's dive right into the discussion. What's going on here?
I avoid using technical jargon when I can.
But maybe, to put it in a bit simpler terms, if someone buys this now, you have to tell them you're buying a claim to nothing. And you can hope that someone will take that claim to nothing off your hands for a higher price. You bought it.
The intrinsic value.
Yeah, you're buying a claim to nothing.
The euro and the dollar are also nothing. It's just paper.
That's printed.
That's true. That's the same thing. No, because if I have a euro banknote, I know that I won't get rich with it. Yeah.
2 for us, please.
Slowly. Bill.
I would like to briefly touch on this point again.
No, but it's clear. Of course, that's how it is. Sure, when I have my money, I don't even know what's so funny. It's just logical.
So you can already see the direction this is going. And here he obviously made a Freudian slip right away. He basically admits that the euro is just a joke. On the other hand, he argues against Bitcoin and says that Bitcoin is basically just a joke. And I want to make it clear to every viewer that a decentralized, limited, scarce monetary system is available 24/7. No one is excluded, it's inclusive, somehow a freedom technology, censorship resistant, and so on, so it's not just a joke. He might not get it. For him, it might be just a joke. But the real joke here is actually the euro, and he actually admits that. And he says here, you can't get rich with the euro. And that's exactly the big mistake, that the euro has lost its saving function. And Bitcoin has exactly that saving function.
Trump's announcement definitely led to that. Also, like I said, how much sense does that really make? Maybe we'll get to that too.
Achieve overall positive effects. The question is, what could you need a Bitcoin reserve for? What's it good for? You can say from an overall economic perspective, whether the Bitcoin price is at 1 or at 1 million, it doesn't really matter. For the economic development in the U.S, I would say no special effect. It doesn't really matter. A few people might get richer or poorer, but the price, even with a huge range, is actually pretty irrelevant. So there's no reason for the government to build up a reserve right now to stabilize the price. There's really no reason, and you have to be careful. What one wishes for, if the American central bank were to buy Bitcoin on a large scale at the current price, and if it's a strategic reserve, then it would serve that purpose. Dismay when the price goes way up. That would be the only purpose of such a reserve if the price goes up, that they would then sell it again to dampen the price. So if I were a Bitcoin freak, I wouldn't want that at all.
Because prices drop.
Exactly. Yeah, because the idea of the reserve is, yeah, exactly, to balance out price fluctuations. Otherwise, I don't need it. And with oil, it's clear if the oil supply tightens, price goes up, the government releases its oil into the market. The price goes back down. So if he had Bitcoin now, Bitcoin price goes up, the government says, okay, strategic reserve, but if I use it, then the price would go down. So that's why I don't really know if that's such a good idea for Bitcoin, that the government just sits there and stabilizes the prices. Basically, just takes away the price spikes.
So in Cynthia Lummis, the image clearly states that the Bitcoin can't be sold for at least a certain period. Was it 5 or 10 years? Or was it even 20 years? I'm not quite sure. But that's complete nonsense in the end. What every Boofinger basically puts out. Because this isn't about trading Bitcoin or selling off any spikes. And what do I know? It sounds like one of those traders or something. Instead, it's about holding Bitcoin long-term, thus stabilizing the dollar. Maybe also putting something valuable behind the dollar again, that the dollar can regain trust. And in the long run, the big vision here is to potentially pay off the debts with it. But like I said, that's a long-term thing. It's not about trading any spikes and doing something short-term here. What do I know? To ensure price stability. Instead, that's completely misunderstood. Here's the concept of the strategic Bitcoin reserve that's being planned in the U.S.
Look here. We've now seen that Trump's announcement definitely had an impact. Also, how much sense does that really make? Maybe we'll also see in the future about setting up static reserves. Can you already see what kind of developments or events are coming up in the next few months that could potentially influence the price?
The problem isn't so much that the price is driven from the outside, that it's being manipulated from the inside. There is. Historically, it was Tether that manipulated and drove the price of Bitcoin. There was an agreement with the New York Attorney General where they came to a consensus to not do that anymore. They are no longer allowed to offer Tether in New York. They had a vested interest in driving the price somehow. Meanwhile, MicroStrategy has somehow decided to take on a ton of debt, like borrowing money to buy Bitcoin, and then they tell everyone else to please buy Bitcoin too. If enough people believe that, then it's actually a good business idea. At least if you bought in at the beginning and not at the end. The last ones are the suckers. First, it was like, yeah, a bit like the lottery. How the price has developed. Back then, I always called the lottery the tax for stupid people. And in a way, I see Bitcoin as the investment for fools too. Because when you hear someone telling you that you should invest, you're already too late. So the price, that's what a market actually does. Generating information about an underlying company, commodity, or state just doesn't happen in the Bitcoin market at all. That goes for the others too. I don't really differentiate much within the crypto industry. Because the market is not subject to fair rules, because it is controlled by a few entities that have self-interest. It's manipulated at will. And that's a problem. That's a problem for everyone who invests. That's a problem for the market as a whole. That's a problem for the innovation potential that can be found within the technology itself.
Let's remember, this is coming from someone who's funded by the Ripple Foundation. He's saying that the whole Bitcoin market is unfair, that it's all being manipulated. He even says that it's comparable to playing the lottery. That's basically what this is, the investment for fools. But we need to be very clear here that Bitcoin is just a free market. So If someone has a lot of money like MicroStrategy or Tesla, of course, they can buy a lot of Bitcoin. Maybe they can have a little influence here on the price, but that's what it is in the end. Normal market mechanisms, that's what's happening here. Manipulations. If we really take a look, what manipulation is, manipulation means that the rules of the game are unfair. So we don't have unfair rules of the game here. We just have a few players who might have more money than others. But that doesn't necessarily mean that the rules of the game are unfair. If we take a look, for example, at how it is with the euro, there are a lot of people who earn their money in euros. And then on the other side, there are people who don't have to work for their money, but they can just create it out of thin air. On one side, there are people who hold euros, and they have to hold onto them almost compulsively to pay their taxes. On the other side, there are central banks who can just manipulate the interest rates, who can determine the interest rates, who can expand or shrink the money supply, who can basically mess around with the money. They can play around with it. And in the end, that's the real manipulation here. And when certain people recognize early on that, hey, this is an awesome technology with Bitcoin, and that's where I want to jump in, and those might be people who have a bit more money, then it might not be so great here. But that doesn't mean we have manipulation.
Because you make yourself a pawn in the game. Trump, with his strategic reserve, a significant part, the second largest. Mining pools in the world are still sitting there. In China, followed by the big democracies Russia and Kazakhstan. What kind of strategic reserve is that when you expose yourself to the will of these states, as the United States of America?
What's a Bitcoin fan?
So that's pretty clear.
No, because you can't prove that. That these companies are manipulating Bitcoin. That's a claim, first of all.
An agreement gives a paper, published in the Journal of Finance, where exactly that is proven.
No, it just says that they should stop commenting on it. But it's just not provable that purchases made by MicroStrategy influence the Bitcoin price. On the contrary, even Tesla's purchases didn't influence the price back then. It was more the statements that Elon Musk made afterward that had more of a psychological effect on people. But that was only of a short-term nature and then regulated back to normal. And Bitcoin is organized in a decentralized way. That means even if other countries are mining or if there are large pools in individual countries, they have no power over Bitcoin and can't change Bitcoin either. There have been such attempts in the past with Bitcoin. Some players wanted to change the protocol, had the entire industry on their side. That was the so-called New York Agreement, driven by players like Reher and Brian Armstrong from Coinbase. The whole thing, the crypto industry that existed back then. And they also had over 80% of the miners on their side to change the Bitcoin narrative. The blocks to be able to increase the data size. And the users back then said, if you change the protocol, then we won't install this update. We're staying in the old network, even if there are fewer miners there. We're not switching over. And that means, in the end, this new network lacks this economic power, also the economic power that gives miners purchasing power. And, of course, mining too, until it makes it worthwhile at all. And that's what ultimately led to this, that the miners switched at the last minute and stuck with the previous version of Bitcoin. And that really shows how strongly Bitcoin, as a network of people, can stand against individual actors within the network, like miners or even politically relevant figures.
I need to jump in for a second because I've heard the decentralization thing a few times. That's just wrong. Bitcoin is not decentralized. 3 mining pools control it today. Those with more than 51% of the hash power can control the blockchain. If 3 people agree to kick their users out, they can rewrite the blockchain. In the history of Bitcoin.
So the professor seems to not understand the difference between Bitcoin miners and Bitcoin mining pools. And secondly, that's not true. Even if the Bitcoin mining pools have 51% of the hash rate, they can't just rewrite Bitcoin like that. That was nonsense. I mean, they would have to maintain the hash rate over a longer period of time. And what if that were to happen? That they rewrite the blockchain, rewrite it, then the miners would immediately leave the mining pools. I mean, the mining pools are just service providers for the miners. So it's such nonsense to claim that you can somehow roll back the blockchain. And whatever, they would have done that a long time ago, if it were really that easy. I mean, then everyone would do it. Just coordinate with 2 people here. Come on, just roll back the Bitcoin blockchain for a sec. Take down the whole Bitcoin network and so on. But it's not that simple after all. And in the end, it's basically someone who just stands there. Big shot professor and so on. Yeah, and here's a Bitcoin expert in the market.
That's just wrong. Bitcoin is not decentralized. 3 mining pools control more than 51% of the hash power today. So they can rewrite the blockchain if 3 people agree. That if you kick your users out, you can rewrite the blockchain. In the history of Bitcoin, there have been several events where an individual had over 51% hash power, and they could have rewritten the blockchain. One individual. It was also the case that Bitcoin is not protected in any way. Before imitations, Bitcoin Cash, Bitcoin SV, we have the exact same code. The only thing they've changed is the community. There was a huge argument around it. But basically, you have what's actually being done. With Bitcoin, it doubles every time. The kind of inflation that fiat currencies are criticized for exists in crypto just the same, it just works a little differently. You shouldn't push this false narrative of decentralization. Bitcoin is more centralized than the German banking system. That's pretty clear then.
That's definitely really awesome statement here. Just from that, it was already worth it to check out the discussion here. So Bitcoin is definitely more centralized than the German banking system, way more centralized. That's obviously nonsense. Bitcoin, I mean, how many nodes are there? Tens of thousands, 20, 30, 40, 50, 60,000. You don't even know how many nodes there are worldwide. And now let's ask ourselves on the other side, how many nodes are there in the banking system? Is there a single node? The central bank, or whatever. Or for all I care, let's maybe break it down a bit between regional banking systems and maybe interregional banking systems. And what do I know? Then we might have 10 nodes or 20 nodes, or let's say 100 nodes or something like that. So when I say nodes, I just mean here ledgers, which is the whole transaction history. The transaction history is basically stored here. With Bitcoin, it's decentralized and spread out all over the world. And in the banking system, there are like 3 or 4 people who kind of make the decisions, where everything is basically centralized. And the next thing is that there are a few people in the ivory tower of the ECB here who set the rules for money. That means we not only have a centralization of the teacher, but also a centralization of the money rules. With Bitcoin, we obviously have a completely open protocol. An open source protocol where theoretically anyone has the option to fork and move to another system. When he's had enough of Bitcoin, he also says beforehand something like, yeah, Bitcoin isn't protected from imitations and so on. Yeah, that's true. Anyone can imitate Bitcoin. Anyone can create a fork. He can make a Bitcoin for all I care. Here we are at the beach, a Bitcoin saltwater fork or whatever, right? I do. Or to be name it. However he wants. Saltwater fork sounds weird. Anyone can create any kind of fork. But the problem is you can't just copy the Bitcoin network that easily. The Bitcoin network has network effects here.
You can see what's happening with Bitcoin Satoshi Vision and Bitcoin Cash and all that. They're all heading towards zero. And the crucial thing is not somehow here. The computer code, whether it says X1 or X2 or something like that, but the decisive factor here is really the community. And here it's about the agreement of the people. And if people leave here, then Bitcoin will be pointless here too. If you simply have a Bitcoin here, it is then limited to 20 million, but no one has it anymore. If no one is participating in the network, then it's just completely pointless. And now I have an important announcement for you all. So this awesome TREZOR Freedom Edition is now sold out. Congratulations to everyone who got the Freedom Edition. And now there's a giveaway. I'm giving away one of those TREZORs, a hardware wallet in the Freedom Edition for you. And all you have to do for that is follow TREZOR here on YouTube, and then join the Bitcoin Advantage group down below, and please write in the group why Bitcoin is freedom for you and how it allows you to live a freer life. Here, I will pick a winner from the responses in the Telegram group, and he will get this awesome Bitcoin Freedom Edition. If you want to buy a TREZOR hardware wallet, make sure to check it out. I have a link below to the TREZOR hardware wallet, where you can also get 10% off your purchase with the Pro Bitcoin Hotel. So I absolutely recommend it here.
In light of this view of hard money, and that's what makes Bitcoin visible. As a limited store of value, it's like a yardstick that can't be changed. The euro changes constantly. Nominations that can't be changed, while the euro keeps changing in size all the time. And that's what we do. We're constantly trying to build houses that we measure with yardsticks that change their length from day to day.
Well, and with the yardstick, you have to say. So clearly, the euro is like a yardstick that gets about 2% longer every year. So we need to see how to measure over time with this yardstick. Measuring, of course, it changes. But if that's relatively little, it's somewhat manageable. But Bitcoin is just a yardstick that's completely variable. I mean, it's sometimes this way, sometimes that way. So there is no more variable ruler. Like Bitcoin, the yardstick in the end is really about what can I buy with it. Purchasing power is crucial. Us consumers and the purchasing power of Bitcoin fluctuates wildly.
We've got a lot of volatility, but the purchasing power of the euro has decreased. Since the euro was introduced 25 years ago, its purchasing power has dropped by 40%. Honestly, we have way more problems with inflation. As it's presented, the consumer price index, which is the basis for measuring inflation, is being manipulated. I find that a bit dusty.
Be honest.
There's no evidence for that either.
There's also ongoing scientific debate about that.
How that's determined. We need to get back to a reference point. There's a difference between opinion and knowledge. So
here you can really see the hubris of Professor USW. Here it basically just says, hey, there's no inflation because there just aren't any official studies or anything like that. But it's just being ignored here, that there are roughly 8 billion people here. There are people around the world who basically have to finance their lives every year. It's being made harder because the money system is systematically collapsing here. We have nearly all collapsing fiat money systems, which are basically the foundation of our economy. Sometimes it's a bit better, maybe in Switzerland. So you might not be able to say it's 8 billion people, but maybe a few billion people. Some systems are really bad. And in the end, you just have to look at the daily reality and take a look. What did apples cost 2 years ago, and what do they cost now? Apples. How much did bananas cost 5 years ago, and what do they cost now? What do bananas cost now? Do I have to work just as much? Do I have to work just as many hours to be able to maintain the lifestyle that I lived 5 years ago? Like the lifestyle. The one I might be living now, which might be similar, do I have to work just as much, or do I suddenly have to take on a third job, a fourth job? I still have to max out credit cards just to be able to maintain my lifestyle. So yeah, you can argue here as a professor and go on about how, yeah, there are opinions and there are facts and arguments and blah, 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 but you just can't lose sight of the reality out on the street. And just living here in an ivory tower and then saying, yeah, but there are no official studies. And at the same time, it's pretty clear that the basket of goods is being manipulated here. They mix in all sorts of goods that then have specific deflationary properties. Or in America, they just take coffee out of the basket of goods because coffee is getting too inflated, and that would affect the inflation rate, and so on. And if inflation is simply too high, this has already happened many times. In the past, they just changed the way inflation was calculated. So back then, there wasn't even a basket of goods. Then inflation escalated way too much. They just said, okay, hey guys, bro. Sorry, inflation can't go that high. We'll just do the inflation assessment here. Adjust. And what we're doing now is, instead of increasing the money supply, look at it globally, how much has the money supply expanded? We're just not doing that anymore. Instead, we're just creating a basket of goods. And with the basket of goods, we can mess around even more, and so on. So in the end, that's a really nasty argument being thrown around here.
there's a difference between opinion and knowledge. You can just throw in anything. No, that's cheap.
Let me finish first, please.
I'd like to explain that.
It's good to put that into perspective, but just let me finish for a second.
I need to address that.
So, Peter, let it be. Let me finish. Peter, let Evelyn finish speaking first, then you can jump in.
Then you can go ahead and elaborate. The fact is that there are many cost factors that are also relevant for consumers, like rental prices and so on. In the consumer price index, they're set way too low, with 30% though. And also, for example, a lot of things that we have to set aside for. Retirement insurance, where we need to set aside savings. And other values, they aren't captured at all. And that's why it isn't really meaningful. It's not really meaningful. And the corresponding inflation is actually much, much higher than this 2%. And we notice that pretty quickly. We notice this when we're at the checkout, when we're shopping, in our shopping cart for 50 euros. There's less and less in there than we were used to in previous years. People used to expect that. When we pay rent, maybe we spend about a third of our salary on rent and a third on living expenses, and so on. These days, in the city, you need at least more than half of your income just to be able to pay rent. And none of that is really represented accurately.
Is inflation higher than 2%?
There's a measure that applies. Best scientific standards. It was developed by the authority. That's free from any conflicts. That tries to measure it to the best of its knowledge and belief. You can debate whether this needs to be represented more through technological change. The consumer has changed from time to time because new things came into play. There's a method, and there are economists who argue about it. I warn against the idea that here, science, with peer review where researchers actually care. Think about it, what can we know? What is true in a field like social science where it's a bit trickier? Equating it with people who operate without this process, who deal in half-truths, that we somehow put this on the same level. I find this format a bit challenging because you all did that too. During Corona, you had to deal with that people said you should drink bleach now because it protects against Corona. And now we need to sit down and discuss Bitcoin. A reasonable payment system is the whole thing is simply not on the same level, just because there are multiple people involved.
That actually, in the discussion about Bitcoin, no one is brought down. I'll definitely bring another one.
You all, it's definitely not so certain whether people might die with Bitcoin. That's really being questioned a lot here. On the other hand, we have a system that basically relies on theft, where we're basically systematically pulling money out of people's pockets in the fiat money system. And now there are some professors here who claim, yeah, right?
Here, with Bitcoin, it's not even that certain whether people might even die because of Bitcoin. That's always the ongoing discussion that will come up later too,
where Roman is debating with them and they're saying, yeah, we absolutely need this. Inflationary money system in deflation, we're all going to die and so on. And Roman clearly discusses this and says, hey, no, it's really not a problem. If we have a deflationary money system here, then we also get something back here. Then we basically get something like a dividend from the economy. That means our lives won't get harder. Instead, our lives will get easier. We don't need to work more. Instead, we should be working less. Anyone who saves a Bitcoin will notice this. Anyone who's saving Bitcoin can tell, hey, I need to work less somehow. And a whole lot of people I know, they just stop working after 5 years or so of saving Bitcoin because they realize, hey, I've created so much wealth. Now I don't have to work anymore. Of course, the deflationary effect will eventually lessen. Of course, the gains will eventually decrease. Then, it's not like you can just stop working after 5 years when you've made so many gains. But that's basically the absurdity of this discussion that someone is trying to convince us here. We need chronic inflation here, and everything else is really, really bad. And then the world will explode. But that's not the case. Instead, they're basically discussing things against the well-being of the people. And that's really quite, I almost want to say criminal, but criminal is such a tricky word. When you have some people, again, the ones who post ads or something, you can't just accuse people of being criminals, that they're criminals. That's why I won't use the word criminality here or take it back. But it's definitely highly questionable here. What's being discussed here and how inflation is being defended. It's kind of like Stockholm Syndrome, you know. Then you have a criminal or someone who flips on you, and you still defend that person, who basically holds you hostage.
The best.
I just mentioned that part because things got intertwined and copied. It's just one thing for a moment.
Yeah. The issue of wealth distribution. If you look at the wealth distribution in Bitcoin, the best, let's say, neutral study that exists on this, I checked it out because I was curious. What's that? The best I found is that the wealth distribution in Bitcoin is more unequal than in South Africa at the end of apartheid. Now everyone can think about that at home. What the heck? Everything must have gone wrong in a system that leads to a greater inequality in wealth distribution. Like apartheid South Africa. From a moral standpoint, it's really, really hard to justify. You meant at that moment, well, but no one has died because of Bitcoin.
Compared to drinking bleach.
There were several cases where child pornography content was linked and spread on the Bitcoin blockchain. The Catholic Church felt compelled to say that Bitcoin is dangerous because it promotes child pornography. If the Catholic Church is saying that, you might want to think about it. What kind of comparison is that anyway?
So that is what is ultimately not understood here. That Bitcoin is just an open system. Anyone can just write anything into the blockchain. And what if people want to write in some porn or whatever? Then it's also possible. That means Bitcoin doesn't censor here. There's no good or bad here or anything like that. Of course, it might not be that great right now. I personally don't think that's so great either. But still, Bitcoin is also for enemies. For enemies, for everyone, in the end, Bitcoin is there. The second thing he does here with the inequality is, of course, total nonsense. Everyone had the chance to buy Bitcoin from the very beginning. People who bought in earlier might have benefited more. That's right. but they also had a higher risk. And the cool thing is that Bitcoin is limited. That means if you gamble here, you can't do any more bailout packages. You can't redistribute money anymore. And that's why the distribution of Bitcoin will get better over time, not worse. And that's what a lot of people here misunderstand. I mean, how do you plan to do that? That you have an optimal system with an equal distribution. Money will always centralize somewhere, because some people might have a knowledge arbitrage. They might know more than other people. That means the money will end up back with the smart ones. The people who don't have that kind of financial education are basically left in the dust. But what does Bitcoin do differently here than the fiat money system? That there is no Cantal-Jure effect here. There's no redistribution effect from money printing because some people are at the money printer while others are not. And that's why Bitcoin is a much, much fairer system. And to compare this with apartheid or something like that, there's definitely an absolute which hunts against Bitcoin. It's just crazy what's going on here. And I want to touch on the Stockholm Syndrome again, because the way they argue against Bitcoin is just like how they desperately try to maintain the fiat money system. Oh, please, holy fiat money system, don't break. Where you don't even realize that you're actually the loser in the fiat money system. He would probably be here. It would be much better if he would just accept it. Hey, Bitcoin is a truth and a technology whose time has come. And it's very, very difficult against a truth and a technology whose time has come to argue against it and stand against it. I mean, sooner or later, he's probably going to have to realize it too. By the way, I'm back in my cave now. Here in the home office. I'm done here myself. Let me show you the view. I'm just chilling here and checking out these cool ARTE clips. You can really hang out here comfortably. I have to say, that's a really interesting argument, even when you keep looking at the reactions. That is, Evelyn and Roman were always very, very chilled, very, very matter of fact. And the other two professors, they always argued very, very emotionally. It's like if you had to convert someone, I don't know, like if you had to convince someone of something. And I don't know, it's like you have to convince someone, and so on. And I'll say this, the argument. If you just look at the argumentation, the rhetoric, the body language here, then you can really see who, let's say, on the winning side is whoever has the better arguments. Theoretically, you don't even have to look at the arguments. It's enough to just observe the body language here, you know.
Look, is this network really secure? So, for example, to protect against hackers or, I don't know, a state could just take over the thing or suddenly say, hey, let's go.
Not in the past. It has already been hacked. The blockchain had to be repaired. So that answers the question, is it secure? No, it's not secure. The problem with mining pools, because we briefly talked about it earlier.
So guys, you heard it. The Ripple-funded professor says here, Bitcoin is not secure. It has already been hacked. Sell all your Bitcoin. Bitcoin is going to crash. There's going to be a collapse. Peter Boofinger also points out that if we have Bitcoin here with a deflationary currency, the economic system will collapse. Selling all your Bitcoin is obviously just a joke. Do whatever you want with your Bitcoin. This is not an investment recommendation. That's obviously a ridiculous statement, right? As if Bitcoin has already been hacked. There was, of course, a glitch about 10 years ago, or maybe 6 or 7 hours ago. And then they just, let's say, fixed it. Then they fixed that up. Bitcoin is also a flexible system. And since then, there's been 100% uptime. And that's what the professor doesn't mention here. He goes way, way back into the past. He says here, yeah, the system was hacked for about 6 hours. Then it was successfully fixed. And since then, we've had 100% uptime. And now someone wants to scare us, saying that Bitcoin is going to be hacked with corporate security and blah, blah, blah. Then they also talk about mining pools, where it's explained that he has it again. He explained it really twice, not just once, but twice. And the professor still hasn't realized that mining pools are just service providers. For the Bitcoin miners, it's basically like playing the lottery, tip communities or something. And when there are just too many people in the network, it gets tough to find a block here as a solo miner or something. And that's why you just need mining tools to stay profitable. If you don't get any block rewards or shares of block rewards otherwise. So I definitely found it to be an ultra interesting discussion, even though a lot of nonsense was spread around here. It's still always fun to watch discussions like that, where there are really two different sides. On one side, you have those who are massively defending Bitcoin, and they definitely have the much better arguments. On the other side, you've got some clowns trying to sell you on the euro. They're trying to sell you on inflation and trying to make theft sound appealing. And if you want to buy Bitcoin now, I'll give you a link below. 21 Bitcoin, how you can easily, safely, and simply buy Bitcoin. Here, with the code Bitcoin, you can still get up to 20% off the fees when buying Bitcoin. Absolutely recommend it, guys. See you later. Greetings from the Bitcoin cave here in El Salvador. See you later. Peace out.